Hello and welcome back to Money Gist, CBN, bringing you all the updates from the topmost monetary authority. The governor of the Central Bank of Nigeria, Olayemi Kadeso, says recent foreign exchange reforms are already helping to stabilize the naira and attract more money into Nigeria. Speaking in Lagos during a lecture at the St. Gregory's College, Kadeso said the reforms were introduced to clean up the FX market, remove distortions, and improve transparency. One major step was ending Nigeria's multiple exchange rate system. According to him, the gap between the official rate and the parallel market has dropped sharply from about 50% in 2022 to less than 2% on the average last year. He also said the CBN has cleared the backlog of foreign exchange requests that previously made it difficult for businesses and investors to access dollars. Because of these changes, investment inflows into Nigeria reportedly jumped by nearly 200% between 2023 and last year. Kadeso added that inflation, which once climbed as high as 34%, has now dropped to around 15% as the CBN tightened monetary policy. Nigeria's external reserves have also grown, reaching about $50.45 billion, the highest level in 13 years. According to the CBN, stronger export earnings and higher diaspora remittances are helping to support the reserves. The CBN governor says transparent markets and stronger financial institutions will be key to Nigeria's long-term economic growth. Nigeria's tough economic reforms like fuel subsidy removal and changes to the foreign exchange system didn't just happen overnight. According to the Central Bank of Nigeria, the government was forced to act after the country lost about $90 billion in oil revenue over 11 years. Speaking at a policy dialogue in Abuja, CBN Deputy Governor for Economic Policy, Muhammad Sani Abdullahi, explained that Nigeria's oil earnings dropped drastically from about $92 billion in 2012 to less than $2 billion in 2023. That is a 98% collapse in expected oil revenue. He said before the reform started, Nigeria's economy was facing serious problems, including falling government revenue, declining foreign investment, and uncertainty around the exchange rate. According to him, many investors stayed away because they were worried they might not be able to take their money out of Nigeria when they needed to. Abdullahi also revealed that Nigeria's foreign reserves were actually much weaker than they appeared. While official reserves looked like $32 billion, the country's real usable reserves were only about $800 million at the time. Because of this situation, the government and the Central Bank of Nigeria had to move quickly with major reforms, including allowing the naira exchange rate to adjust naturally instead of maintaining artificial controls. Now the CBN says those reforms are beginning to show some results. According to Abdullahi, Nigeria's net foreign reserves have grown from about $800 million to around $32 billion, while investors are gradually regaining confidence in the economy. He also said non-oil exports have improved, reaching about $6 billion last year, with a target to double that figure in the near future. While challenges remain, the CBN believes Nigeria is slowly moving away from the severe economic imbalance it faced in the past and is now on a path towards recovery. The Central Bank of Nigeria has introduced a new rule that could make things tougher for big borrowers who fail to repay their bank loans. In a directive signed by the Director of Banking Supervision, Olubukola Akinwumi, the CBN has ordered banks to stop giving new loans or banking support to large borrowers who already have unpaid loans classified as non-performing. In simple terms, if a big company or borrower has defaulted on a major loan and that information is recorded in the banking credit system or with credit bureaus, they will no longer be allowed to access fresh credit from any bank. And it doesn't stop there. The CBN says these borrowers will also be blocked from using other banking services linked to credit. That includes things like letters of credit, bank guarantees, performance bonds, and advance payment guarantees, services many large businesses rely on for trade and contracts. The Apex Bank says the goal is to protect Nigeria's financial system and stop big borrowers from repeatedly taking loans they fail to repay. Banks have also been told to demand stronger collateral from these borrowers to secure the loans they already owe. This move comes as bad loans in the banking sector have started rising again. Recent data from the CBN shows Nigeria's non-performing loan ratio climbed to about 7%, which is above the safe regulatory limit of 5%. According to the regulator, the increase happened after pandemic-era loan relief measures were removed, forcing many previously restructured loans to be officially classified as bad loans. The CBN says it will closely monitor banks to ensure they follow this directive, and any bank that fails to comply could face penalties under the banking law. Meanwhile, Nigeria's banks are currently sitting on a lot of extra cash, and instead of lending it out, they are parking it at the central bank. New data from the CBN shows that commercial banks deposited almost 7 trillion naira in the Apex Bank's Standing Deposit Facility, also known as the SDF. As of March 11, banks parked about 6.96 trillion naira before it dropped slightly to $6.69 trillion on March 12. So what does this mean? Simply put, banks currently have much cash than they are lending out. Instead of taking the risk of giving out loans immediately, many banks prefer to keep the money safely with the CBN and earn overnight interest of about 22%. One major reason for this surge in cash is that the government recently paid back about 1.5 trillion naira from maturing treasury bills and bonds. When these government securities mature, investors, mostly banks and big institutions, get their money back. That money then flows into the banking system, increasing liquidity. But the government is also trying to control the situation through new treasury bill sales and bond auctions. Authorities issued about 933 billion naira in fresh securities, which helps absorb part of the excess cash. Still, the numbers show that liquidity in Nigeria's banking system remains very high. In fact, the CBN has been aggressively trying to reduce excess money in circulation. In January alone, it drained over 15 trillion naira using tools like treasury bill sales, open market operations, and deposits at the SDF. And in February, another 3.57 trillion naira was sterilized in just 3 days. Nigeria's banking sector is about to get stricter rules on fighting financial crimes. The Central Bank of Nigeria has given banks 18 months to fully adopt new automated anti-money laundering systems, while other financial institutions have 24 months to comply. The directive, which took effect from March the 10th, applies to banks, mobile money operators, international money transfer operators, and payment service providers. Under the new guidelines, financial institutions must deploy advanced automated systems that can detect suspicious transactions in real time. The goal is to strengthen the fight against money laundering, terrorism financing, and other financial crimes. According to the Apex Bank, manual monitoring is no longer enough as Nigeria's financial system becomes more digital and complex. The systems must also include strong know your customer checks, sanctions screening, transaction monitoring, fraud detection, and secure audit trails. Interestingly, the standards also allow the use of artificial intelligence and machine learning, but these tools must undergo annual validation and bias testing to ensure accuracy. Banks and other institutions must submit their implementation roadmaps within 3 months. Failure to comply could lead to regulatory sanctions, penalties, and other enforcement actions. The move aligns Nigeria's financial system with global standards set by Financial Action Task Force. Similarly, Nigeria's banking regulator, the CBN, has announced new rules aimed at reducing fraud and improving the safety of digital banking in the country. In a new directive to banks, other financial institutions, and payment service providers, the CBN introduced several updates affecting bank verification numbers, instant transfers, and mobile banking apps. First, the Apex Bank says financial institutions must now create a temporary watch list for suspicious BVNs. If a BVN is linked to a suspected fraudulent transaction, it can be placed on this watch list for up to 24 hours while the bank contacts the customer to verify the transaction. The CBN also announced that BVN registration is now restricted to individuals who are at least 18 years old. In addition, customers will only be allowed to change the phone number linked to their BVN once, a move aimed at preventing fraudsters from hijacking bank accounts. At the same time, the CBN is introducing new safety features For instant bank transfers in Nigeria, customers will now be able to voluntarily switch off instant transfers on their account if they want extra protection. When this option is turned off, transfers can only be done physically at the bank. Another new feature allows customers to set their own transaction limits as long as they remain within the official maximum limits. Banks are also required to deploy enterprise fraud monitoring systems to detect suspicious inflows and outflows in real time. For mobile banking apps, the CBN says accounts must be linked to only one device at a time, and switching devices will require fresh authentication. In addition, newly activated mobile apps will have a maximum transfer limit of 20,000 naira in the first 24 hours. The BVN changes will take effect from May 1, 2026, while the new instant payment rules will begin on July 1, 2026. According to the CBN, these measures are designed to strengthen security, reduce fraud, and build greater trust in Nigeria's digital banking system. As the world marks this year's Global Money Week, the Central Bank of Nigeria is warning Nigerians to protect their banking information. The Apex Bank says customers should never share their PIN, password, or any sensitive banking details with anyone. This warning comes as cases of fraud and online scams continue to rise, with criminals targeting bank customers. According to the CBN, even if someone claims to be a bank official, you should never give out your personal banking information. Fraudsters often call, send text messages, or emails pretending to be from banks just to trick people into revealing their details. The CBN is advising Nigerians to stay alert, monitor their accounts regularly, and always use official banking channels. Customers are also encouraged to report any suspicious activity immediately to their bank. Global Money Week is an international campaign that promotes financial literacy, smart money management, and safe banking practices around the world. So remember to protect your information and protect your money. Have you ever received any suspicious calls or messages from someone pretending to be a bank official? And did you detect it in time, or did you fall for it? Share your experience with us in the comment section below. That's all the money gist from the Central Bank at this time. I'm Oluyemisi Dada. Remember to turn on your notification bell and be the first to get fresh updates on monetary policies that concern you. Like, subscribe, and share. See you in the next video.